You're saying you're still overweight on India within your EM strategy, but the big risk is with oil. And given where the currency is this morning, that's a double whammy, isn't it?
Well, we are bearish on emerging markets generally. So on 20th of June, we took our target prices down quite considerably and are forecasting around 5 or 6% downside in dollars from current levels. But within that, we would expect India to do slightly better. But the general environment is quite poor with very large fund outflows. We had a firming of the Fed hike cycle expectations earlier this month. We've had relatively disappointing forward-looking growth numbers out of Japan, Europe, and North Asia. We obviously have trade protectionism. I think you highlight oil as a risk factor for India, but India's underlying business cycle is in a somewhat different position from other economies, and it's in a recovery phase, quite early recovery phase. So I think in that respect, we would still be relatively somewhat more bullish India, but within a generally bearish view on emerging markets.
What makes you bearish in China, though? I see that you've downgraded China.
Yes, we have. So China's a structural long-run outperformer of emerging markets. Its outperformance actually accelerated during the initial phase of declines in emerging markets, but we think it made an important performance relative high on the 18th of June. The bilateral tariffs that are likely to go into play between US and China is one reason for caution. But also we're seeing quite large reversal of flows through the southbound Connect programs from Shanghai and Shenzhen into Hong Kong. And the Chinese macro data for May was quite weak, and the renminbi has started to weaken against the US dollar, again following along from some of the weakness we've seen in other EM currencies, but that's been a more recent development in relation to China.
Jonathan, when you say you are out, you have an overweight stance on India on a relative basis, do you think Indian markets could give positive returns from here, or Indian markets will also fall, but they would fall less with other emerging markets?
Yes, that's a very good question. I think they will fall by less, is our view. And if you actually look at the recent performance relative of the Indian markets to global emerging markets, that's exactly what's happening. So India is not amongst the worst performing markets. It's slightly outperforming, but not doing as well as, say, markets that are proving truly defensive, like Taiwan, for example, or in the broader Asia region, Australia. And one of the reasons that we turn more constructive on Australia and Taiwan is their very high dividend yield support. So having strong dividend yield support and strong domestic institutional investor support from the superannuation funds in Australia and the national pension funds in Taiwan, those are good things to have in an environment where global capital is flowing out of emerging markets at such a rapid rate.
Jonathan, it's interesting that you are overweight on India, but you overweight on India at a time when we are about 12 to 18 months away from the big general elections. So some would argue that this could be a challenging environment for Indian equities in general because of the political overhang.
Yeah, so we are overweight India, but it's not our largest overweight. It's a small overweight. So there are other markets that we are more constructive on in terms of the degree to which we overweight them, including Singapore, Thailand, and Taiwan, as I just touched on. And yes, that election cycle is something, again, that's ongoing in a number of emerging markets. Mexico is holding its very important presidential election this coming weekend. So it's always a judgment point as to what moment that actually affects market performance.
Oh,
I've got time for one more question. Thank you.
Yeah, just one last question. The other variable this morning is on emerging market currencies. What are your thoughts there? Because for a foreign investor, it's really the equity returns plus the currency returns that determine their investment decisions. What's happening with EM currencies, and do you think that this is likely to spiral down even further? And in that light, will the rupee hold?
Yes, so we recently raised our forecast for the US dollar to a stronger profile than before against currencies across the board. And that certainly means that the Indian rupee, as will many emerging currencies, have downside risk, but it's probably not the largest downside risk. If you look at the external imbalances and sovereign risk characteristics, including foreign exchange reserve positions in emerging markets, then there are other countries that are more at risk of adjustment than India. But equally, at the other end of the spectrum, we would have somewhere like Taiwan again that I mentioned earlier, not only with dividend yield support on the equity market, but running a very large current account surplus with very large sovereign external wealth and no sovereign external debt. So India is, I would say, sort of not the worst position, but it's not the best positioned either.
Great to have you on the show. Thanks very much for taking out the time.
Thank you very much.
And giving us a quick piece from your note, which talks about your emerging market view. And more importantly, within that view, so while Jonathan Garner is bearish on EMs, his view still on India is one of resilience. He believes that the Indian market will continue to be an overweight for them, but oil prices are a big risk. Let's talk